What's up, guys? Welcome back to a brand new episode of the Daily Dip where we ask good traders good questions. And I think this time we're all just going to gather around and complain about how red the market is. So make sure to like, comment, subscribe, helps us out a bunch, and enjoy.
So what's going on, guys? This is Thick Teddy from Twitter, and today on this epic episode of the Daily Dip, I'm bringing to you guys some beginner screeners you can use to kind of get your DD started, find some tickers that you like with decent charts, find some tickers with some decent fundamentals and technicals, and I tried to make them simple so that you can understand and that they're easy to implement. So starting out, I have the 20-day moving average over 50-day moving average screener. So what this is basically it's going to point you to stocks that within the last 20 days have been trending upwards more so than they have within the last 50 days. So that means within about the last 20 days, they've moved up at a higher rate. So first off, we have market cap. We're going to do market cap over 50 million. And then average volume, we're going to do over 500K, just so that we know people are trading the stock. Float, we want to do under 50 million so that we know that it can move easily with volume. Price, I do under 7 or under 10 on most of my screeners, and for this one, I did under 7. And then the only technical that we need on this one is SMA 20 crossed SMA 50 above. So that just means moving average from 20 days has crossed moving average of 50 days recently and is now above it. So then we got 11 tickers, and I've kind of already gone through them, but one I'm going to show you is HT. So I'm going to go to my Webull, a little easier to see, HT. And so this is a kind of just like a classic from this scanner. So as you can see, within the last 50 days, we can go back a little further to here, and it kind of was down in the $5.50 range all the way down to $4.67 range. But then we had a nice uptrend, and now it's kind of consolidating above $6. So that's a nice chart to see. Moving on, I'm going to do my abnormal volume next. So for this one, all you need to really do is you do micro, so over 50 million, and then you do under $10, because I don't know, I just like under 10 or under 7, like I said. And then I go up to signal and I do unusual volume. This is nice because it already gives you they screen it out for you, so you don't really have to do any of the hard work on it, I guess. So I do unusual volume, and I have 29 tickers. These are tickers that have had unusual volume within the last few days compared to the last 90 days. And some of them, if you go over here to their price change, some of them are down 72%, some of them are up 20, up 16, down 17, up 14. We can go to next, and yeah, so you can just see, and then we can go to technical, and if you want to narrow it down a little more, we can do performance, and you can do today up. So these are stocks that have had a good run today. We see 35%, 16, 14. Some of these are lower. Some of these are just kind of stagnant. And then also you could do today down. And these are just really to see what has abnormal volume for the day. It's a good pre-market scanner. It's a good just to see what's going on. Next up, we have the positive 50 moving average to 200 moving average. So this is one of my favorites. What it does is basically it tells you either stocks that have recently moved the 50-day EMA, because I prefer EMAs over SMAs, above the 200 EMA, or that are moving close to moving above the 200 EMA. So what we do here is we do market cap over 50 million, average volume over 500K, float, I kept it under 100 million. I didn't have enough under 50, so under 100. And then I did country USA, price under $10. Technicals, so this one, it gets a little more interesting. So FinViz uses simple moving average. I like EMAs. So what I found is I can get this to work the same way if I do SMA 50 below SMA 200, because SMAs kind of lag behind EMAs most of the time. And then I do month plus 10%. So what this gives me is, like I said, things that are either moving to cross the 50 EMA above the 200 EMA, or things that have recently crossed the 50 EMA above the 200 EMA. So I've already looked through them. There's about 38 of them. I'll show you two that I think are prime examples of this. They're CHMA and CLDT. So CHMA, we'll go to it. So as you can see, it has kind of had this channel uptrend since July. Maybe we'll go since the mid-July. And it looks like the EMA is curling up to want to cross close to the SMA. Might not cross, it might just get close, but nonetheless, it is a good steady uptrend, and it would be a decent entry, in my opinion, if we find a dip. And then the next one is CLDT. So CLDT, prime example of the 50 EMA has recently moved across the 200 EMA. So we're seeing a tiny price action compared to it, but there could be a better steady uptrend coming with this golden cross. So those are two stocks that are prime examples of my positive 50 EMA to 200 MA. And last but not least, we're going to do oversold. This is one of my favorites. I love catching stocks at the bottom. I love catching stocks on reversal. So what this screener is it's going to tell you stocks that have been beat down, stocks that are at a low right now, and that things that you can put on your watch list for a curl up, for anything that could indicate news, any news could send them flying. So descriptive, again, we're going to do micro over 50 million. Average volume, I did over 200K on this one, just to kind of give us some more options. Float under 100 million, and we're doing under $10 again. Technical, we're going to do quarterly up. So what that's going to say is within the last 4 months, or 3 months, it has been above what it was before. And then performance 2 is month down. So that's going to tell us it's had a short-term downtrend. So we're not getting stocks that have been dying and bleeding for 5 years. We're just getting stocks that are down for the month. For whatever reason, we may not know. It could be a low float oversell, a offering, anything like that. And then over here at RSI, we're going to go to oversold 40. So that shows us that they're not all the way down to the oversold 30, but they're getting close and they're not anywhere near overbought. And then I have it at a new low for the 50 days. So that means within the last month and a half, it is at a new low. And what we're getting here is we have 7 tickers. If you want more tickers to go through for this, you just need to take off this 50-day higher low, and then you'll get more. I can show you that in a second. But these are some good names that I like right now. BMRA, I played it when, I believe, somewhere in July, and then they had an offering. And now it's just been on a steady downtrend. We can go check it out on here. So yeah, it was all the way up to $12, and then now it's on a steady downtrend, and we're looking at $5 and 86 cents to $6 right now. That's looking like it could be prime for a reversal. PLM, let's check out PLM. PLM just had their reverse split. I've been on it for a while, but look at this downtrend it's having. Could have a reversal, and PLM also has a catalyst coming up with the Tesla battery day, so that's big too. XELA, let's look at that again. XELA, Zaroslow oversold. Look at these peaks that it's been having, and then now it is dying down. So we're finding support around 38 cents. It had support down here at 38 cents. So it could be prime for another reversal at 38 cents. And like I said, I'll show you. You go, oh, we don't want new high. You go to any here, and then now you have 41 tickers. So those are my 4 screens that I think are good beginner screens for anyone who's looking to get into screening, finding their own stocks, and also finding stocks to do DD on. Go through all of your options, go through all of the screeners that come out, or all of the tickers that come out through the screener, and you will find things that you like, you'll find charts, and you'll find fundamentals that you like. I hope that this helped, and thank you guys for having me on.
Another episode of the Daily Dip. Dan, thanks for having me on again. Always a pleasure. We got a jam packed episode, so let's start things off with a segment we did last episode, the markets, what's hot and what's not. And there was a lot of red today. We saw the SPY coming off its all time highs. It closed at 345.39. I mean, if you bought puts in anything yesterday, you were paid handsomely today. We saw a little green scattered throughout. We saw Penny, Shiloh run 100% today. Let's head over to the maps. All of the household names were red. I mean, we can see a little bit of green scattered throughout, but Microsoft, Apple, Intel, Nvidia, Google, Facebook, Disney, Netflix, Amazon, Home Depot, Walmart, Costco, Coca Cola, Tesla, they were all in the red. Why did this happen? Personally, I think it was a sell off before the Friday sell off of a long weekend. People were anticipating. Normally, there's a sell off on the Friday. So they put their stops in, or they decided, they saw a little bit of red today. Let me sell because tomorrow could potentially be that sell off. The shorts took advantage of this and they feasted. We saw a lot of money coming out of the markets today. We saw a huge outflow. What's in store for tomorrow? Personally, I think tomorrow is going to be more of a flat day, maybe plus or minus 1%. I don't see a lot of volume tomorrow. I don't see people re adding to their long positions or averaging down. I don't see the shorts, shorting too many stocks tomorrow. So I think tomorrow is going to be more of the flat day and we'll pick things up again next week. Having said that, guys, I wish you all the best in your trading. Have a wonderful long weekend. God bless.
Yo, what's up? Welcome to the Daily Dip. I'm Tommy from Breathe, Carolina. I'm going to tell you guys what I saw in the market today from the eyes of a new trader because, like most of you guys, I just started in February, March, and I don't really know what I'm doing like a lot of the guys on here. So, mostly what I saw today is it fucking sucked out there. I started the day trading Tesla, which was that was pretty good. It went well. And then after that, everything just went to shit. All my swings were down. I didn't see any real opportunities for day trading. So I kind of just sat back. I day traded a lot of my swing positions to get the averages down and have minimal risk because they were moving, very minimally up or down. So I would just kind of buy in low, sell on a little pop, and get my average down while making like $50 here or there. But yeah, mostly today was about practicing not jumping into stuff that didn't make too much sense. And yeah, that's really all I saw. Dan, thanks for having me. Sorry about OKC, man. You can watch the Lakers. That's all I got. Talk to you guys later.
All right. Relax. Holy fook. Okay, I'm looking at SPY. There's literally 5 red candles on the weekly since March. That's absurd. Take a deep breath. Fucking relax. Okay? Everything is trading at such a high. We need this pullback. You should want this pullback. Relax. Take a deep breath. Read a book. Because when the market gets hot again, okay, we want everything to sell off, come back 45%. Because when the fucking market comes back, we're not gonna eat, we're not gonna breathe, we're not even gonna fucking drink. Because we're gonna be so up to our fucking eyeballs in fucking stocks. So relax, okay? Stop going balls deep on fucking options. Don't listen to egghead motherfuckers that tell you that options are easy, because they're not. Stick to what you know. Penny stocks. Chill out, save your capital if you have no more than 40% of your portfolio on the street, and wait till the market gets hot again. Stop being a fucking gambler. The market will come back again, and all that money that you're losing right now, you're gonna wish you fucking had. So relax.
Hey guys, Mr. Prez here for another episode of the Daily Dip. We're going to be quickly talking about the VIX today. This is more towards the option guys. This is going to be kind of going over what I use the VIX for and how you can use it to kind of determine what might happen with SPY and the price of puts. So real quick, I don't day trade options without having my VIX up in a little quick window right underneath my SPY. or in this case ES, as you can see in my little quick charts. I usually have it on SPY, but it's about the same. Basically, the VIX is a measurement of volatility. A lot of people consider it to be the fear gauge. If you look in the past, um, you've got your big COVID spike where VIX hit all-time highs at 84.17. So the volatility in the market was at all-time highs. Basically, whenever the VIX is high, your contracts, your options are going to cost more. There's more estimation of volatility, so you're going to be paying more for those premiums. You chart the VIX the same way you would with anything else. I like to plot my key levels. They're not really like price points, so that's not an accurate way to describe them, but it still works the same. When you're doing technical analysis, if you can visualize the price action with these candles, you can chart it out and kind of see what's going on. So basically what I do with the VIX is I put it with the same time frame as the SPY, say 5 minute. It's kind of like a leading indicator. So when the VIX starts spiking, that means that the call to put ratio, more people are going to begin to buy puts. And this could clue you in on a potential drop in the market today. So when you plot your lines on the VIX, you can kind of see today at the bell there was chop, both sides, just up and down, up and down, up and down. But then what happens is you have a reversal on the VIX that starts this push into the 2775 level down here. And what happens when that, it starts at 905 until 920. And if you go to your SPY chart, what happens? You have a nice, nice red candle up until 920. Boom. You get a breakout on the VIX with the puts being bought, and you get this nice sell-off on the SPY. So it can be kind of like a leading indicator, because what happens when you break out of any chart, you have to come back down and retest that level. So the VIX comes down after that move up, puts an inside bar in on this support level 2775, and you can see on SPY it put in that little green, corrective profit taking, whatever. The next thing you notice is you have a nice little consolidation, like right in this area right here. And what happens, what happens in SPY when we go through that consolidation? You have it as from 9:20 to 10 o'clock. So you look at your chart, you go 9:20 to 10 o'clock. I mean, you have another move down, but you have this little consolidation period as well, while the VIX is trying to decide what it wants to do. Once VIX finds and confirms this support at 2775 and breaks over this consolidation range up to our next level at 31, what happens with the SPY again? You see another pretty significant push down. And here's where the VIX can start to be really powerful. And once you break above a key level, such as this 31 level right up here, and you see this bearish candlestick, that's a pretty clean reversal sign on a normal chart. So if you were to buy SPY calls at the close of this bearish candle, as soon as VIX price, I guess quote unquote price action, falls back under this key level, you take SPY calls and you're up pretty decent. Whenever this kind of scenario presents itself, you look at the VIX for any kind of support, and you try to see if SPY might bounce again or continue the downtrend once it hits one of these moving averages, resistances, continue its move down or what have you. So obviously you can use this on higher time frames. The higher the time frame, the more powerful the move's probably going to be. One thing that's super important to use the VIX for is divergences. So if you're seeing SPY go up, 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 but you're seeing the VIX also go up, 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 up. This is a price divergence in the VIX and the SPY, because normally it's supposed to be inverted. So if SPY is going up, VIX is going up. One scenario that could happen is that VIX is trying to clue you in that people are buying puts as SPY rises, so you might see a move down soon. And it's the same thing but reverse. If SPY is going down, but the VIX is, slowly creeping down as well, the sell-off might be putting in some exhaustion soon, and then you might, your VIX might reverse, or your SPY might reverse while your VIX is going down. Obviously, the divergences aren't going to be 100% foolproof, but it's just another tool that can give you conviction, or it can kind of give you confidence to stay in your trade or enter your trade a little early. Because look, as VIX is putting in these, this is real time, whenever VIX is putting in these bearish candles, look what's happening with SPY. You put in this big red candle on SPY, shows a little bit of exhaustion, then you put in this bearish candle with the VIX, this little topping pattern. It can help you nail those pretty good scalps, especially if you play those quick in and outs with size. That's pretty much all there is to it with today's episode. Quick overview, or a little recap. The VIX can be used as a leading indicator to kind of predict short-term, decent-sized movements in the SPY. It's usually an inverse chart to SPY, so whenever it's leading with SPY, moving with SPY, you note the divergences. Yeah, I mean, this is something I always use when I'm trading options, so I hope it gives you something back as well. I don't ever trade without having this on my quick charts. That way you can still focus on the price action you're trying to see. All right, guys, thanks for having me on this episode of the Daily Dip. This is Mr. Prez again. Follow my YouTube, Mr. Prez Trades, my Twitter, Mr. Prez Trades. Hope you guys have a fantastic trading session.
Hey y'all, how we doing? So today we're going to talk about market action, and I know everyone saw a lot of red today, and what are you going to do about it? Well, in my opinion, you need to learn how to trade more than just one thing. Don't just be a bull, don't just be a bear, don't just be anything. The market is going to give you many different instances on what we can do, and even red days can be green days. So here on the left, we've got SPY. This has given you a very good indication of the market. We see a huge sell-off here. It sort of holds a trend line, and then a slight recovery here at the end. Now on the other side here, VIX, this is a volatility index, or what some people call the fear index. Now as this goes up, everything else becomes much more bearish, because volatility and fear are skyrocketing, and you can see it holds this trend line all the way up here. This dips a little bit after hours, so this is after market. Now we're looking at, look how it roughly consolidates, no real major movements, but then right about 10, a little bit after 10, we start getting some spikes, and it continues all the way up to just about 36. Now, if we look here on SPY, right around 10, a little bit after, that is when the sell-off also happens. We get a little bounce here and comes through, but this is still a very steady downtrend until slight recovery at the end. Now, on a lot of days like today, people are saying, hey, let's add dips on swings, and you're worried about all these reds. Well, the thing is that you can, and there's nothing wrong with that. But what I like to do is just switch my tactics. So today I started here and played a put to here, then played a put from here to here. They got me 1,800 and 2,500% on playing bears. So, a bear day can still be a green day. And how you can kind of look at these is look at all these large caps and mid caps just taking a beating. Even after hours, some are taking beatings. Now let's look at some indexes. Some are getting a little bit of love after hours, but most just took beatings all day. So you can see what's happening is things are selling off. Mostly today we saw a tech sell off, and when tech sells off, we get a lot of other sell offs. Now, it doesn't mean that there still aren't smaller caps that we can play. In Atlas, we had some great momentum plays. You know, they had some volume. You can scalp them. You get in, you get out, you take a green home, and that's great. But you always need to be aware of this entire bearish trend. You know, we have huge sell off, still downtrend, and then VIX complete uptrend of volatility. Now, when you're seeing things like this, it's why I say play more than one thing. If you play more than one thing and more than one way on top of that, that means you're ready for whatever the market gives you. You can play puts on large caps. You can play puts on SPY. I know not everyone is comfortable with playing SPY, and there's nothing wrong with that. There are many other ways to use the market to your advantage. Again, let's look at some large and mid caps. All of these taking a beating because of huge sell-off and huge spike in volatility. All of these are great short or put opportunities, and you can make sure that sell-off days are not red days entirely. Like, your swings are not going to stay red forever. They will come back, but we have some reset happening. This is also going into a longer holiday weekend, which is very common. Now, maybe this 26 to 36 volatility fear index is not quite as common, but sell-offs in general, this whole bear pattern is pretty common for a long holiday weekend. It's profit taking, it's sell-off taking. This is just what happens, and it's something you need to be aware of. A lot of people closed swings this week because they were expecting a much more bearish outlook towards the end of the week. Now, again, I know SPY isn't everyone's cup of tea. I'm not saying play SPY, but when you use SPY and in correlation VIX, you can get a very good indication of what's going to be going on with the market. So you're not taken off balance and saying, oh, holy shit, everything's going red. Why? Well, you got a market holiday, long weekend. You see bearish on SPY. You see high uptick on VIX. This gives you an idea. Now you can adjust your strategy and make a bear day a green day. Thanks for having me on Daily Dip, y'all.
Hey everybody, it's Dr. Steve checking in on this week of special acquisition companies. If you're not familiar, special acquisition companies are essentially a bunch of wealthy people that IPO a company, raise a ton of money off of investors and traders, and then search out a private company that they can bring public. The private company, instead of IPOing, would do a reverse merger with this SPAC, which saves them a lot of time and money and allows them to capitalize on market conditions. Some of my favorite SPACs are listed here. A lot of traders will show you charts. I'm a 9 to 5 worker. I really like to find swings that I really can predict how they're going to perform. And with special acquisition companies, they really follow a very specific timeline of when you can make money, and they're pretty dependable and reliable. At the bottom here, you can see a little workflow of when you really want to jump into special acquisition companies. So when you found a really strong management company or a group that has already done some successful SPACs, you're pretty much guaranteed on day one when warrants go live. If you can get them right out of the gate, they're going to get you a really juicy return. After that, you usually find the SPAC sort of linger or die back down for quite a bit. And then you might hear some rumors start coming out about it. Great time to jump in when you're finding chatter about a potential company that SPAC is going to be. It really never ends up being true, but you can make a couple 100%, especially on the warrants during that rumor period. You'll then get a letter of intent or an announcement of a merger. And this is a really big run. If you can get in early on this news, a huge gain to be had there, especially on warrants. And then after you know what company it is, there's a lot of sympathy runs, and also any news that comes out related to that company is going to give you a good return there as well. Leading into the merger, you're going to have a run up again, and then post merger, you're usually going to have a bit of a jump. Between each of these phases, oftentimes you'll find that the stock starts to die down and go back down a bit lower. Except for these last two, the pre-merger and post-merger, there's not often a simmering period between those. There's so much detail we could get into around that workflow and when you can make money. There's a lot of dull periods between each phase. We don't have time to get into that today, so let's just go ahead and take a look at some of my favorite SPACs. LCA is an online casino out of New Jersey. The Golden Nugget, really great revenues, growing quickly during COVID. Graph, Shell, SPAC, all three in the EV space, super hot right now. With Tesla leading the charge, we're getting some great multiples. Nikola led the way also on the SPAC side of things. I think we're going to have some really huge gains here, especially on SPAC, who hasn't really ran that much, all that much yet. FMCI into the grocery freezer section with vegetarian foods, really popular, growing quickly. FEAC announced its merger target today, Skills. So we saw a great little run on that announcement. JWS, IPOB, IPOC, all three of these are great management teams. They're going to have some great success here coming up. I have a lot of faith in them, and we'll be looking to enter them shortly. If you look at some of the price action this past month on these SPACs, it's incredible. On the equity side, we're looking at gains of up to 185% on Shell. All of these, though, are 19 and above, the ones that we have merger targets on. So really above average returns here. Today was a great day. We saw 27% on FEAC as it announced its potential target here that they're moving forward with on a merger. Warrants are hot. Look at this, 301% up on the month on warrants for Shell. Wow, that is a great return. And look at these, LCA, Graph, FMCI, all 130, 183, 144%. There's a lot of money to be made on warrants. And why is it such easy money? It's because you can lose it all in the click of a finger. So be careful with warrants. Know what you're trading when you do pick up warrants. Excellent returns going on with SPACs right now. I still see a lot of potential here with the Graph warrants, with FMCI warrants, and SPAQ warrants over the next month. I think the three of those are the spot to look to get in. Thanks, everybody. Dr. Steve Brule on Twitter, Doc Steve Brule, with underscores in between each. I've got a lot of materials you can pop over and read a bit more on SPACs.